Hi guys, welcome back to ASX Market Watch and charting trend signals around the world. This is where we look at the economy from a chartist's point of view. We see which way the indices are heading around the world, and we believe that 3 out of 4 stocks might be following those indices. So it pays to know which way they're heading so that we know which way we should be trading ourselves in our own trading. Just as to give you an example of that, over the last few weeks on the All Ordinaries down under Australia, some great shorting opportunities have been available if you know where to look. And that is part of the beauty of trading. And let's just jump straight into it, guys. There's a lot to get through. Let's just jump straight into the All Ordinaries. So far, so good. And actually, last week was something that we said. People started to get excited. They were like, oh, the market's heading back up. They found support right here at 4,700, which we said it would, by the way. Check the previous ASX Market Watches. But did we call a new uptrend? No, we did not. And what we actually found was that that the market would have to cross above this downtrend line for the trend to change. Has it done that yet? No. And what happened? Boom! The market has continued downwards. And so basically that's the simplicity and yet the power of this analysis. It's just absolutely fantastic stuff. Guys, as an aside, we've still got massive resistance at 5,000. Check the previous ASX Market Watches for the reasons behind that. And what we've got is support just coming up here at 4,550 there on the All Ordinaries. And if you, what I'd ideally like to see would be for the market to get back down to the 4,200 level so that we could get another decent up move before it hits that resistance at 5,000. I hope that makes sense, but you know what? At the moment, it's still in a downtrend. That's all I'm going to say about that. Follow the market, follow the trend of the market, and when it changes, we'll be the first to tell you because, you know, we've got it, we've basically nailed it as of late. It's been absolutely fantastic on these market watches. Guys, next up is the Dow Jones. What we've been looking for is for a close below this level. Why is that? Because the market has gone up above that level right here, right there. That was like a possible trend change. It wasn't supported though because it couldn't get a higher trough and a higher peak. So no love from that action right there. And instead the market continued down. We wanted it to make a solid close, like a little zigzag pattern and a solid close down. We got that on Wednesday, and now the market has also closed below the uptrend line. If we look at that, there's our uptrend line. That will tend to find support for the market. And what has happened? The market has closed below that, which is a solid sign of weakness. So we've got our confirmed shorts, like our short-term exit signal, and it's also closed below that uptrend support. So basically, short-term exit signal on the Dow Jones. We've been waiting for it for a while, guys, but now it has actually happened. What we're looking for, if you were to look at it from an Elliott wave point of view, there's a very large potential for an A, B, C move, basically because we had our 1, 2, 3, 4, 5 waves up, and potentially you could be seeing this ABC correction. Whether it happens in a sharp move or a sideways move, that's not for me to say, not at this stage of the game anyway, but all I can say is that we have got that short-term exit signal on the Dow Jones. The FTSE, really simply, the FTSE, really simple stuff, guys. Over the last 6 months, we've had this sideways range, except for this anomaly in March 2011 when the Nikkei fell and all that stuff happened in Japan. Guys, we've got massive support at 6,001, massive resistance at 6,100, sorry, and quite a decent amount of support at 5,850. Now, what we've got, the last move on Friday for the FTSE in Europe is this single bar here. Now, as you can see, we had another bar very similar to that. It's a bar that indicates buyers because it starts high, it goes down throughout the day, and it closes high, indicating that buyers have come back into the market throughout the day. As you can see, the action following that the day previously was 4 days of upwards price action. Now, I'm not saying that that is going to happen now because we're really starting to test it. You can only test that support so many times before it fails. But if it does fail, and it'd be 5,800, that's what we're looking for, guys. Now is 5,800 on the FTSE. If that fails, we could see a further down moves from there. That would be your solid sort of confirmed downtrend. And as you can see, it would also coincide. See this long-term uptrend line here? It would also coincide with closing below that. That would be another sign of weakness on the FTSE. So that's something to be very mindful of. And again, these markets around the world are starting to converge. When they start to converge, we see strong, solid, nice moves, whether they be up or down. We've had up over the last 6 to 8 months. But we also had down during 2008, so that's something to be very mindful of, guys. Next up, the Nikkei. Let's check out the Nikkei. And again, over the last couple of months, we've absolutely nailed the Nikkei. Called a short-term downtrend 3 days before the mega crash on the Nikkei. And again, not rocket science because of that. Like a very simple analysis. What we did. We also called a very short-term uptrend at the very bottom of the market on the Nikkei. Basically because look at that, it's that same bar as we've got on the FTSE. A high start down throughout the day and then a high close as well. Now, what did we do just recently on the Nikkei? We also called a short-term downtrend right about here a couple of weeks ago. Now, why did we do that? Because it crossed that beautiful trend line and it made a little zigzag pattern down. Now, 3 days after that, Japan was called to be in a recession. So basically the charts told the story before it happened, and now the market is still in that sideways to down movement. I would really want the market to close above 10,000, which is going to be a huge psychological level for the Nikkei, just quietly between you and me, or maybe not so quietly. But basically, if it closes above that level, that'll be a new uptrend. That's not what I'm expecting, and if I were to hazard a guess, I would expect the market to continue down because we are in that short-term downtrend. But again, all you can do is run with the confirmed trends at this stage. And yeah, I'd really want it to close above 10,000 to be in a confirmed uptrend again. Next up is China. Mighty, mighty, mighty China. And again, over the last sort of 6 to 12 months, we've absolutely nailed China. It's been beautiful. The Shanghai Composite called a short-term entry signal there, called a short-term exit signal here, and then called another exit signal right there. So we've had, up, down, and then more down. Absolutely, yeah, beautiful stuff on the Shanghai Composite. I won't go into the reasons why. You can check out the previous ASX market watches because it's very simple stuff, not rocket science in any way, shape, or form. Really, really basic tools, and yet extremely powerful tools, guys. And what we're looking for now, as you can see, the Shanghai Composite has closed below its longer term uptrend line. But hang on, let's look at this from a longer perspective. Here's the bottom of 2008, and if we were to just check this out, there's our really long term. It's a 2.5 year trend line, guys. Where is the market finding support? They're right there. How beautiful is that? That's almost poetic. It's finding support right at that 2.5 year trend line, which the market will tend to do. However, this is the kicker on the Shanghai Composite. Now that we've got this support here, but what else have we got? Just coming right up, very, very, very close by, is still that downtrend resistance. So what we might find is that the market might sort of track, and it might be caught in between these two trend lines in a sideways movement for a short period of time. But at this stage, the downtrend still remains on the Shanghai Composite. We'd really need it to close above that downtrend line for it to be confirmed in a change, any way, shape, or form. So that's China, still in that downtrend. Happy days, but at its support level as well. The Hong Kong Hang Seng Index, not much has changed, guys, on this. It's sideways for almost a year now, between 22,200 and 24,500. And again, it's sort of flirting with the uptrend line, the long-term uptrend line on the Hong Kong. If it was to close below that, so around about 22,500, that would be like an early indication of a weakness in the market, or a short-term downtrend, or a longer-term downtrend, sorry, because it's already in a short-term confirmed downtrend with that little zigzag pattern down. Now I think we're up to the last one, and that would be the BSE 30. Beautiful India, happy days, loving the Bombay Stock Exchange 30, absolutely loving it. And again, we called a medium-term uptrend back here. We got a short move out of that one, guys, but it was caught by the resistance, which we absolutely called as well. We said, look, that there would be resistance around that level. Why is that? Because of the downtrend line. It will tend to find resistance at that level, and it has, and it did. That's exactly what happened. We also called a short-term, like another short-term sell signal right there as it closed below the uptrend line. As you can see, there's that beautiful uptrend line. it is, you know, fantastic. And what has happened? The market has closed below that, so that's given us a short-term exit signal. Now, what has happened after that? The support which was there has now become resistance over here, and the market's just sort of been rejected by that resistance right there at the trend line at about 18,600. Now, what we're looking for now, I mean, it's still in a confirmed short-term downtrend, and really even in a medium-term downtrend as well, guys, because it's now 6 to 8 months that it's been heading down. It would really have to close back above the 19,400 to be in a decent uptrend in any way, shape, or form on the Bombay Stock Exchange. Until then, short-term downtrend, medium-term downtrend, and yeah, we'll definitely keep you posted if the trend changes, as absolutely for sure. And that, my friends, is the market, is the world economy, is finance from a chartist's point of view. Absolutely fantastic way to spend a couple of minutes on your weekend finding out which way the world is heading. Guys, cannot wait to share more with you next week. And again, such simple technology. Really, it's a line on a chart. Grab yourself a ruler and a pencil. You could do the same thing. Apart from that, we'll do more trend changes and be right at the forefront of your trend changes next week. Cannot wait to share it with you. Until then, happy trending and bye for now.